This is askSlim Live, September 26, 2023. Information and support for traders and investors in a time of crisis and beyond. This is the legal things we need to take care of. Everything that we bring you from askSlim, all that information is for entertainment and educational purposes only. It is not investment or trading advice. The sole purpose of everything that we do on this website, oral, written, video, anything, is to provide information which could possibly be used by a person or entity in discussion with investment advisors. Your decisions that you make regarding trading should come from your own trading plan. So please consult your own trading plan always, or the professionals that you use for any investment decisions that you make. All askSlim Live events are being held to support for our members and are not included in memberships. They've been created for times of special needs. Note that these events are likely to be recorded. This one is being recorded right now. Sometimes we offer it for public viewing or offer it to our whole membership. We always act to protect your identity still. We can't guarantee that your identity will be held completely anonymous. Your participation in this event is an acknowledgement that you understand and agree. Okay, please refer to our terms, disclaimers, full legal information at askSlim.com. We are ready to roll. We have a lot of people in the room and people still coming. Remember, use the Q&A for any questions you have on analysis. This is how you contact us with all of the emails and what we cover. So whatever we're the lead on is listed here, and you can then take a screenshot of this or refer to it if you're assuming most of you already have it. So this is how you reach us. This is who we have here today. Yes, it's the whole analytical team. Me, those of you that may be brand new know that I'm almost 50 years as a trader. Matt Serpe does a tremendous amount of work here. Arvi is just amazing, and Katie, just all experts in cycle analysis and many different aspects of analysis. And you know the kind of support you get from our team. I think it's just amazing. And if you want to know more about us, go to askSlim.com, about askSlim, and meet the team, and you'll see our interviews in there and some other information. So that's a good way that you get to know us. Here's today's agenda. I'm going to bring you a market brief looking at the big decline that we're in right now. Matt is going to bring you an important update on the MCM, and he's going to demo the new MCM Pro version available for MCM Premium members to begin to beta test in the next few days. So he's going to tell you more about how you can participate in the beta testing of the amazing new Pro version. We'll do the express round of Q&A with all four of us. Your questions on our services, trade planning, chart analysis, trading issues. The floor is yours. So we're going to get to that really soon. First thing we're going to do is talk about this market and the decline that's going on in the market right now. Just a little bit of an overview. And I would tell you that stocks investors, they're finally getting an idea of what the realities are, and they're getting hit in the side of the head by that as the market is moving down with some aggressive selling. Of course, we're looking at interest rates going up in a slowing economy, which is not ever very good. Look at money markets. They're up to about 5.4, 5.5%, and that is huge competition for a stock market, especially one that is extremely highly valued, such as this one. We have the dollar that's going up based on the higher interest rates, and that's really bad for the multinational stocks because that then makes their goods and services less competitive because it's more expensive for people in other countries. Of course, the Fed is doing QT, and that's the valuations and the prices that the index are trading is a big disparity from other times when the central banks have done quantitative tightening. And I showed that graphic on that last week in Market Week, if you didn't see that. So there's a big disparity that needs to be corrected right now. And at the same time, oil prices going up, and of course that is inflationary, and at the same time can slow the economy, and all of that I just said is a risk to earnings for stocks. And you know, that's why we're getting this decline coming on. And you know, plus we have showed the analysis which said that money flows based on cyclical rhythms, in other words, money coming in and money coming out, had it so that the market was susceptible of decline in this period of risk that we're in right now, and we have talked about. And just to give another little nudge to the downside, the FTC comes out and sues Amazon for antitrust. In other words, saying that they are monopolizing retail. Of course, I would give you a big argument about that, because if they're monopolizing retail, they earned it, and they have a right to do so. And the other companies that can't keep up, they should go away. That is creative destruction. So I would never argue that a company should be charged with any kind of monopoly unless they're doing something illegal. You can't tell me that Amazon is doing something illegal. Maybe you can. You'd have to send that to me and let me know what they're doing illegal. In the meantime, if they're doing something illegally, I'm illegally ordering from them every single day, it seems, because we get packages here every day from Amazon. It's the easiest way to shop, and they better leave them alone. So, all right, let's get into the markets and take a look at these indexes. So let's take a look as we look at the S&P 500. And we're going to start right there. And I have a few different versions of it to show you. But first, I'll show you this one right here. Do you remember when you looked at charts that looked like this before? I mean, what kind of information do you have on here? What do you know looking at this chart? You really have no idea. I mean, there's a few moving averages on there, and it's going up and down, but you can't really see or feel the movement in the market that makes any sense at all when you look at a stock like that, and when you look at a chart that looks like that. Of course, if you go to here to our weekly chart, now you've got information on there that makes a ton of sense, because you see that there are cyclical patterns in there, that on the bottom are the average cycle rhythms, and up on the top of the chart are the real cycle rhythms, how they turned out. And of course, that gives you a sense for when you're in rising phases, when you're in peaking phases, when you're in declining phases, and when you're in bottoming phases. And that is so important to our analysis. And just add to that the shape of the cycle, and add to that the momentum conditions, and add to that support, resistance, and you can put that all together into this big pot of soup that we're cooking up here, and come up with what the projections are that we can make. And what are we looking at right now? Well, we were looking at a projection of the ABC pattern, where the market would likely come down, and that is right in here, where the market is coming down, and it's just like ABC, ABC right in here, ABC right in here in these periods of risk. And we told you that was likely to happen when it was over here. And I admit, we were worried that it was going to get through this repair level right over here and make us look at our analysis again and then revise it. Well, we didn't have to do that because things worked out as it should. And right now, what we're looking at is these two lines right in here, which if you want to understand more about what this is, write to Katie and she'll be able to tell you about our cycle low tracker that she manages. She's the lead on that. So in this case, this is where these two blue lines are where the expected trough is in this cycle right over here. These two cycles right over here, which are FEZ and FXI, their periods of risk are way out over here. That has me worried that once the bottom comes in here, that they are going to still be declining and then probably give you some problems out over here in this next rally. So we're going to have to see how that affects it. But in the meantime, you can see positive cycle right in here, positive cycle right in here. These are the configurations, a higher bottom, as you can see. This is a higher bottom, as you can see. And that tells you that there is strength in the overall bigger picture. Even though we're having a big decline right in here, you also have translations that give you the peak way on the right side of the cycle here, the peak way on the right side of the cycle here. That all says that once this correction is over with, the next rising phase is likely a high probability of getting up to test those levels again. And that is what I have been talking about, that I believe that November, December would probably give you a pretty good upside. Now, were it to get up in somewhere in here and then fail, and then this declining phase right over here, that minor one, the blue one, If that were to come down and take out whatever low we get here, that would change the entire picture. That would make it very negative and say the bull market's over. But that's not a strong likelihood, and there's more of a likelihood that it will find its lows in here. Remember, we talked about support here at around 4,300, the next one over here at around 4,200, and the next one over here at around 4,110. It's very possible it's going to 4,110 in here. The daily right in here that shows you that the daily cycle trough is late October. So that's why this is coming out way to the right side of this ideal bottoming period right in there. So that's a look at the weekly, and you can see in here momentum negative in this corrective period in what is an overall intermediate term bullish shape that we have here, bullish structures in the market. If you go back looking way over here, you could see this low was lower than this low. That said, this would fail and not make the high and continue down. Once it takes out this support right here, it says the decline is going to happen all the way out to this time frame, and that's what happened. Now we're in a bullish configuration, and it's likely that this decline right in here, though very ugly, and it could get even uglier, is likely going to be an opportunity to be on the long side, but not yet. Only when the indicators tell you that it's time. You don't buy under these conditions because you could get wrecked before you have a bottom in place. So let's take a look at the daily chart over here. And you can see that our projections are pointing to basically the downside that you can see there. And what you have in here is a likelihood that it will make a bottom somewhere right here and then begin to move up. And you can see this dark arrow right there, the one with the arrow on it, is how we highlight that this is the highest probability, and that it probably will rally, get somewhere into this area here, into this bottom resistance, and then begin to move down again. Remember, I said that late October low that comes right over here. And remember, that is aligning with this low that we have right over here. So you can get an idea that when we get into a declining phase in the daily chart again, it's going to align with that weekly, and it's going to likely fall very hard. Now you can see the half cycle right in there, and the third cycle, 1/3, is really what the RUT lines up with, the Russell. So you can see the Russell is out of phase. So the Russell makes the bottoms right over here, rallies a couple of days and turns down very sharply. And the Russell's in pretty bad shape. So right now with the Russell, though I said it's in pretty bad shape, it is the most oversold of all the indexes. And if you look at the OBI, the option biased indicator, the last 3 days, it's been giving warnings that it's a short-term, extremely oversold and very likely to be setting a bottom. And that's what I think is going to be happening in here very soon as the market gets oversold, gets to rally. Now, you see the slim ribbon right in here where it turned down. Slim ribbon PO turns red at that time right over here. And you can see it has not been able to tick up at all. I mean, this shows you the kind of weakness that's in here. It's pretty likely that this is going to get over this level of the 75 before long, and then probably still be red and give you another downside signal. So that's what I would expect. I would expect the rallies in here to be not great and to fail kind of quickly. If it was a little bit stronger, it could take the middle road up to the top of the resistance, which I would say is a lower probability. And if it were to get up to the 78.6% after what I just said to you, I'd say something very significant is changing, and it would warn us that it's changing. And that's what we want. We want to have ways to get warned so that we can redo the analysis, look at it again, always give us the highest probability. The analysis, you could say, some would say to us, if it got up past the 78.6, they would say, Slim, you're wrong. And they'd be writing that on YouTube or something like that, where it's not a matter of right or wrong. It's a matter of using the information you get out of the markets for your trade planning purposes. That's what we do. That's what we give to you. And I hope that that is really hitting home with you. That is what we're doing. I give you some of the evidence when I look at all of this. And this is what all four of us look at all of the time. So that's a look at the side by side. I just want to show a couple more variations of this chart. This is the one I've been showing, now and then, but I think it's so good right now. When you see this, I just showed you that daily chart. Well, this is the 2-hour chart with the daily cycle overlaid on it. And you can see very clearly how this came down, broke that low, and then is giving you a signal that it didn't make a higher high, and it shouldn't because this is a lower low, that the next rally has a high probability of failing. But I also want to show you on the bottom here the MCI. Now, a lot of you don't get the MCI or don't have the MCI, but it shows up on some of the charts that you get in static version. If you look over here, you can see, I want to explain how the MCI works to you. When it gets down into the swing zone between plus 25 and minus 25, it's very important. When I designed this, I weighted the longer term inputs so that if they weakened a lot, it would move through the swing zone. If they didn't weaken a lot, it would hold in the swing zone and then move up again. So in this case, it moved down through it here. It told us that it was negative, as you see the market. Here it tested again and moved through. That tells me that the internals had improved, and it's likely that the market was going to be able to hold rallies. Here, as the market corrected on this daily cycle, it came down here, it tested and moved back up. That's positive. And look what it did here. It just kept moving between this 80 and 100 area as the market stayed extremely strong. It tells you about the strength. Tested here, went positive again, but then tested and went negative right here on the chart. You can see that, and look what happened after that. We have so many great indicators, and this is another one, but you really have to get a sense on how to use that indicator. So I want to show that to you because I think it's really important. And what that's telling you is that a bottom is about to get made in that daily cycle, and it's not likely to be able to make a lot of upside ground. One more thing I want to look at in here, and that is I'm putting up another version of the daily and the 2-hour. So here you can see on the right is that 2-hour with the MCI, but on the left is the OBI. And I'm going to put up the Russell on here, RUT, for you to see, because I want you to see that the Russell has turned orange. I can put the daily analysis on there. Remember, if you're a level 4 member, you'll have all of this saved. So instead of looking at a blank chart, you just go to how you saved it, and you'll get our drawings up there. And here, right over here, you could see on the bottom is what you have is those 3 orange dots. And this is giving you the warning that at this time when we're looking for a short-term cycle bottom, that the Russell is getting extremely oversold. So that's important information for you to use as you do your analysis and set up your trades. Now, so if right now you had positions on that were benefiting from the decline that we were looking at, here's the Russell, as you can see right here, look at how weak that cycle was right over there. If you're benefiting from it, you're on the short side, and we're talking about a cycle bottoming right now, you're not going long. You're covering your shorts. You're reducing your downside risk. You might still want to be short because look at what this weekly looks like. And maybe you take off a half or 3/4 of your short position. And don't worry about it if it keeps going down for a couple of days, because it doesn't matter. You locked in money. You're playing the highest probabilities. The market rebounds in this period after another week or two, and you can put the short positions back on. So that's what I wanted to show you, the value of using these indicators in here, which I think are so important to your analysis. If you have any questions on what I just showed, then you can put them in the Q&A. If not, I'm going to turn this over to Matt.
Wow, that was excellent, Slim. Fantastic analysis.
Wow, I thought so too.
And instruction. Woo. Great, great, great.
All
right.
Great.
So that's a good segue into the next segment, which is an important update on the MCM. As Slim alluded to, we have in the process, we've been working in the background on some amazing new features for the MCM. And one of the new features is part of our Pro version, which won't be out for a couple of months, but we did want to beta test one of the key features, and also coming very soon in the month of October will be the new MCM Day Trader Impulse Monitor. More on that soon, but this segment is to focus on the MCM Pro feature that MCM Premium members, if you're level 4 or if you have the premium MCM version, you will be able to access. All right, so I've got about 5 minutes. I want to run through this as quickly and as efficiently and effectively as possible. Just to give some quick context, because I don't know how many of you are new to askSlim, new to the MCM. So what we want to do with all of our technical analysis services, as Slim talked about, is really optimize your trade planning process. So that's number one. Number two is, why do we want to do that? Well, so that you can create trade setups where you put the odds in your favor. Well, how do you do that? Well, you need to have a methodology that can identify key technical evidence to help formulate that plan. Outlook period, bias, levels, timing. Timing consists of, as Slim talked about, in terms of the pattern, right? Whether we're in a rising phase, a peaking phase, a declining phase, a bottoming phase, a bottom pending, so on and so forth. But then also in terms of timing, you want to be able to have a methodology that can give you signals that your trade setup is likely a go. So with that said, you want to be able to have tools that can help with that process. And that's exactly what the market conditions monitor does, is it can assist in that trade planning process. It can optimize that for you. All right, next, it's meant to do two very important things. So it's a specialized trade planning tool that uses our two primary and most dependable momentum indicators, the askSlim ribbon and also the reversal scout. And what it's meant to help you with is reduce the odds of trading against primary momentum for a specific timing style of your choice, whether you're an intraday trader, near-term, short-term, or intermediate. And then also, you want to be able to create efficiency for identifying when conditions are aligning so you can participate in that next directional impulse move. So that's also very important. So that's the two fundamental specialized features of the MCM. Now, getting back up to this, to be able to monitor all of these different aspects on your own, all of the different symbols, all the different charts, all the different technical indicators is a very challenging thing to do, especially even if you have 2, 3, 4, 5, 6 monitors, it's still difficult, because what we want to be able to focus on, as we just talked about, just let me know if you can see the SPX grid here. Okay. So depending on your trading style, if you're a short-term trader, we want to focus on the daily chart. Then you want to be able to put into perspective how the weekly chart and the 2-hour chart combine together, and what is the overall sum of the evidence or trade setup condition. The reversal, the MCM does just that. It monitors all of the timing for the various momentum indicators that we have in terms of the reversal scout plus the MCM, and then it generates a trade setup condition based on those inputs. Now I'm going to pull over the MCM and we'll talk about that new feature. So at a high level, again, the MCM allows you to see what the conditions are for a specific time frame. So you can go in and we can just look at a time frames view here, and you can pick your time frame. So if you're looking at the 2-hour, you can see what the momentum is on both the reversal scout, which is slightly more sensitive than the slim ribbon. And we have over 115 indicators or symbols in the MCM now, all the top most liquid stocks, ETFs, just a fantastic universe of symbols. And you can do that from, if you have the premium version, from the monthly all the way down to the 3-minute, in terms of being able to see the current momentum condition throughout the market session. So this is not programmed for updating after the market closes. This is happening all throughout the market session in terms of the updates. Now let's get back over to the trader view. And I talked about the two specialized focus of the MCM. One is determining what is the current momentum. As you can see here, if I click on the SPY, this output, the trade setup condition, has likely not been better than neutral since 9/15. So since 9/15 on the short term, it's likely been neutral or bearish in there. And that's why it's important, because since 9/15, obviously there's been significant continued decline in the MCM as a barometer to cross-check your own information would have suggested that the momentum condition, that bias is negative. So that's important. And then secondly, when something is aligning so that the next impulse is likely in order. So what is brand new is the ability to set custom alerts. Currently, there are alerts available on the MCM. Just scroll down. For example, here, I'll click on the bearish Discord channel. So inside of Discord, there's a number of channels that are based on the overall conditions in the MCM at the various time frames. And you can see here, this is on the intraday bearish. What it's doing is it's generating every time that there's a cardinal shift from a neutral or a positive condition over into the bearish condition. And the MCM generates these notifications. Okay, so that happens all throughout the session. But now what you can do is you can set your own custom notifications. You will have your own Discord channel. So for example, if I wanted to be updated, let's say I want to go to the near term because I'm following AMD. And I want to be notified when AMD goes to a slightly bullish condition because it's in a very bearish condition, which would mean that likely something is shifted in the, what am I in here? Near term. So 15-minute has likely shifted, but this is going to give you a sense of when that some of the evidence shifts to a bullish or slightly bullish condition. You can pick bullish. All you have to do is click on and check that box. That's going to set the bell, the alert signal in our system. And once AMD would generate a slightly bullish near-term condition, you would receive a notification directly into your Discord channel. Now, right now we have this set up so there's a total of 20 subscriptions that can be made. A tremendous amount of back-end work has to be done even to be able to manage one symbol, let alone over 115 symbols for anyone who is a premium member. So that's what this beta test is about, giving you a chance to test out this awesome new feature and really incorporating it into your trading plan. So again, you can pick a symbol. Let's just say if someone was watching Boeing and you wanted to look at that, let me go back here. You can see Boeing very bearish here on the near term. Let me shift this over to say short term and go to Boeing. Now I put on notify, and I want to be notified when it gets to slightly bullish, because now I know that there's a high probability that at least a near-term low is probably in place. The momentum conditions have changed, and I want to be notified of that. That's all you have to do. To be able to clear all of the subscriptions that you made, you just click that clear all button. Very easy to use, and it should make a significant difference in your ability to efficiently trade plan. All right, that's what I have in that segment.
Did you say anything about how they would be notified?
You're talking. They'll be notified through Discord, so you'll have your own Discord channel in here. So if you in your direct messages, there'll be a Discord channel, and you'll have your own, which will send you the alerts based on your subscriptions into the alert system.
And send them where?
Over into their Discord channel.
Now how will they know? How will they be notified when an alert goes in there?
Well, there's a little like icon that appears that you've received an alert. If you download the Discord desktop version, it at least for me with Windows 11, I get pop-ups every time that there is a Discord notification. It's like a push notification, and it's extremely helpful. It comes right into my viewing experience, and you see the notification come through, and then it gets posted right into their specific Discord channel.
Right. So you'll demo that, how to do that once we get to that point.
Yep.
Yeah, great.
And there'll be more information over the next couple of days when this is ready, and then I'll host a live event to show how it works.
Great. That's great.
All right.
All right. Thank you.
You're welcome.
Great job, Matt.
Thanks.
Really good. All right, so we're going to get into the Q&A period right over here. I see there's a number in there. How are we doing this, Harvey? You guys are going first, and then I'll do the other stuff afterwards?
Yeah, I think
Okay.
we'll do that first.
All right, good.
Yeah, perfect. All right, so let's go ahead and jump into some of the stocks. There are a whole bunch of stocks that we can look at here. First one that came up was GDXJ, which is, I think, very timely, so I'm going to opt to start there first. And GDXJ is very unlikely to make, and we've been saying this on Future Speak for weeks. High interest rates, strong dollar is not going to be favorable for metals or miners. And we're seeing what is now a left-hand translation in the GDX. So you should see a weekly and daily chart of the GDX and of the GDXJ, sorry, but same picture with the GDX. What's happening here is this was when there was a low due. There was a low due 6.5 to 8.14. You saw a 1, 2, 3 week rally, a very weak rally that failed again right around that 61.8 fib on the intermediate term, turned back down, and then we lost the low. And then you can see what happened after that. We had a lower high form there, and then now a lower low versus that old low already forming. So this is clearly working its way now to the downside here in GDX. Not a pretty picture. You'll see that there's a zone on the downside from around 31.93 to 29.84. That 29.84 is certainly in play. You can see that there is a low on the intermediate term due around that 12.4 time period. So the shape of this move really looks like still a series of lower highs and lower lows going out into that low. And then as we get into that next rally there, we look for a bounce that also likely still fails and turns back down. We're not seeing anything to say otherwise right now in GDXJ. You can see these have been clear going back for many, many years here in the junior miners. Shift over to the daily chart. Okay, so we talked about this in the last askSlim Live, and what we were looking for at the time was a rally back into the zone and a failure. And that was 35.5 to around 37. We had a bounce off the 78.6 that made that lower high, and you can see is now selling off, and we have now lost this key daily low at 32.98. So what's the bias? The bias is firmly pointed to the downside. Any rally attempt would likely fail here in the short term, as there's a low that's due 10.11 to 10.23. Now, what are our levels on the downside? There's a zone here that we're looking for this to sell off into, 31.80 to 30.41 here in the GDXJ. So again, watching for little upticks, just like what we saw back here. Little upticks fail and then turn back on the downside. So we'll be watching for something similar here in the GDXJ. So a bearish intermediate term and short term bias. Let's go ahead and shift over to J&J. And what we have here in J&J is also not looking really all that healthy. There was a low that was due here, 8.7 to 9.25. We have had a 1 week rally that failed at the base of this zone, right around that 164.5 area, and is already getting really very close to this key low here at 157.35. So overall, this is not acting well. We have a low that's due again around this 212 time period. So if this can lose this low and hold below this key low here at 157.35, this would set up a move back to the downside and overall favor a retest of these old lows back here in March of 2023. Note that we saw many underlyings give a solid pop off that number. This is obviously not doing that, and that's at 150.11. Okay, so if we see a move through this old low at 157.35, hold below that low, this old swing low would be in play. Jump over to the daily chart. Again, what are we looking at here? A rally failed right at the base of the zone, turned back down. Now we are ever so close to this old low at 157.35. The overall bias on the short term is also bearish. There is a short-term low due right around 11.2. We're looking for a move down into the zone 156 to 153.60. So this could have done better, but you can watch and see that clear failure, a rollover on the downside, and now it is saying that the bias in the short term has clearly shifted back to the downside. If we jump over to CAT, that is Caterpillar. And what we see here is we have been looking for this to actually form its high. Back on 8.4, back up here, we were looking for it to form its high, fail in this zone from 287.25 to 309.30, roll over. That is really what is happening here. Now, overall, this is a higher cycle high versus this old high, and in all likelihood, a higher low versus this old low. So that says in this next rising phase that goes out through year end, we will look for this to try back toward these old highs at 293.88. But where are we right now? We are in this overall time window where rallies are likely to fail as this forms an intermediate term flag pattern. And we'll be looking for this to hold this zone from 259.25 to around 250. and then look for this to turn back up. Keep in mind there is earnings coming up here in a few weeks, so that is certainly in focus. Jump over to the daily chart. What we're seeing here is, and we have been watching for this to form a lower high back on 9.7, right around here. We were saying that this is a possible lower high that was forming, and now that is clear. You can see we have now looked back at this old key low, 269.20. Now, what we're looking for is for a small uptick here to fail, and then to get another move down into this low, which is due 10.26 to 11.6. That 127.2 fib is certainly in play at 257.5. So watching for a short setup here in CAT for a trade idea. We jump over to the next one. Let's see the XLE. The question was on a near term. I only have my weekly and daily up, so I can share with you over the near term what's going on solely here. There is a low here due 9.27 to 10.9. We're looking for just one more downtick into the zone from 88.87 to around 87.25. Look for it to hold that zone and then give a pop back to the upside after that. Now, it is key to show what's going on here on this chart, because what we have here on the weekly time frame is clearly going to influence what's happening on the daily. There is a weekly low that is due 10.2 to 11.20. You can see we have now curled back to the downside. This is a really, I think, a group that is poised for a significant pop as we get out into year end and into the early part of 2024. So watch this flag ever so closely. If this can just get a small flag right there, hold this zone here, 87.90 to around 85, that would be an ideal setup for a move through these old swing highs here from 93 to around 95-ish. In that next rising phase. But right now, this is looking a little bit choppy. So as I've drawn in here, look for a lower high and then another lower low as we get out into that next daily low, which is due around 11.10. That would be in sync with the weekly, and then that would set up that next opportunity. So I know you're only looking at what's happening right now, but I just want to share what's going on the longer time periods as well, because it is certainly quite relevant right now in the XLE. Let's jump over to, there's another one here, NFLX, and then Apple, and then I'm going to hand this off to Katie. Let's pull up NFLX. NFLX is not acting well. You can see we have a low that was due here, 7.17 to 9.11. We had a 1, 2, 3 week rally and now a failure. And then we have lost this key cycle low at 398.15. So right now, the bias on the intermediate term is pointed to the downside as long as we're holding below this key cycle high at 453.45. Our next low is only due at the end of Q1 of 2024. So the bias is firmly pointed to the downside again, as long as that prior swing high right here is not violated at 453.45. On the downside, we have a zone from 342.60 to 313.60. That's what we're looking for. If we shift over to the daily chart, again, there is a low here that is due around 918 to 928. This is a lower cycle low now versus the old low. We'll be watching for a lower high to form, then for this to roll over. Keep in mind there is earnings. Anything can happen on earnings. It looks like it is 10:18 in the after hours. Jump over to Apple, and then I'm going to hand this off to you, Katie. Apple, we have been on the short side of Apple. It has done well and has now gotten to where we were looking for it to sell off into. So we have to keep our eyes on this one. There is an intermediate term low that is due 8.14 to 10.2. We have a zone that we were looking for it to sell off into, 171.20 to 164. We're basically there right now. If we shift over to the daily chart, you can see that this fell just perfectly with no heat really at all. We had the rally into the zone, then the failure back into where we were looking for it to sell off into, a low that is due 9.26 to 10.5, and we'll be watching for this to get a pop back to the upside. Now, when we form this low, you have to watch this very closely. Does this have a sharp move that moves through that old high right there at 189.92? If so, very likely you have formed that key intermediate term low. If this fails in this zone, let's just say that this is the low. If it fails in this 38.2 to the 61.8 and then starts to roll back down and we lose this low, that says that the low out here is likely when that key low would form. And you can see that's not for, it looks like another 5 to 6 weeks. Okay, so just have to watch to see how we do in this next, this likely bouncing period that is not in place yet, right? Because we don't have any clear low that has formed yet in the short term. Once we form that low, get that bounce, watch that next rally very, very closely, because we are inside of what's going on here in terms of that weekly. Okay, well, I will go ahead and hand this off to you, Katie.
Okay, I'll share my screen.
RV, are you out of here now?
Yeah, I'll be heading out in around 5 minutes. Yeah,
Okay, good work.
thank you.
Okay, let me know when you can see my screen.
We see it.
We can.
Okay, great. So this is Affirm Holdings. It's a company in the fintech space, and you can see that it went from $176.65 down to a low of $8.62. And it's just been kind of going sideways between $40 and $8. If I zoom in here, you can see that this prior cycle did form a base. It ended higher than where it began, and now has been moving up again. We do have this projected up to possibly the 127.2% fib extension level. That's at about 30 and change. But we are declining now into this support zone. So we will see if in the daily cycle, which we'll look at in a minute, if this next rising phase can take us up again. Otherwise, if the reversal scout flattens out and turns over, this may be our high. We don't have a low due until early in the year, January 8th to February 16th. If we switch over to the daily, you can see how flat this is. I'm going to have to zoom in. Let's see if we can get. Okay, here. So we do have this daily cycle timing window coming up. It starts tomorrow and goes through 10/5. So we are in this support zone. And so that next rising phase will tell us a lot. We do have the negative reversal scout right now, and our slim ribbon has neutralized. If we do get a bounce and we fail to take out that high, then over on the intermediate chart, that would tell us that the cycle high is likely in. But if we continue up and make a higher high, then we can consider this to be a bullish picture for some time yet, because our low isn't due for several months. That is Affirm Holdings, and the other one that I was going to look at was AbbVie. All right, AbbVie is going to enter its weekly cycle timing window next week. This was a negatively configured cycle ending lower than where it began. And you can see that this one is looking to form a basing cycle. It's very bullish, starting to flatten out a bit with that slim, with the reversal scout. I do have it projected possibly up to the 78.6, but you can see these wicks on the top of the candle. So it is struggling a bit right there. We wouldn't expect to make a huge retracement considering this bullish look, maybe down to 146-ish. Over on the daily chart, you can see that we're struggling. This is the, I think I zoomed out a little bit too far. The 50% fib extension and the prior cycle peak is kind of where it's struggling right now. That top intermediate support zone is down here below this support zone, so 146. This window is coming out in late October, early November. So if that intermediate low is going to form here, then we will see this begin to turn over. We'll lose the momentum and start declining. But for now, it is looking quite bullish. Those are my two symbols. This would be a buying opportunity depending on the retracement out towards the end of the year.
Okay, that's it. Great work.
Great job, Katie.
Thanks.
Okay, I am going to take that screen back from you. And get into looking at some of this commodity stuff with his questions. If anybody didn't get their question answered on the equity side, We did use up all the time for that. So now I'm going to be looking only at the things that we look at related to the commodity futures or the indexes. We had Roger say to us, bravo. I'm assuming that was related to the new app. If not, whatever it was, thank you for that, Roger. Appreciate that. Now we're going to we'll start looking first at gold and silver. And let me switch over to the charts. So this is gold right over here. Gold is really giving a bad structure right over here, negative structure when I look at it. If you look here, I'm just going to keep the side by side up so that you can see. This over here is a breakdown of that minor low. And what that says is that the next low is not likely to be made until way out here around the third week of October. You can see in here that you had this triangular shape going on, and now it's breaking down under that too. So that is not a good picture when you look at that. And it's fairly likely when I look at this right here that it could come down as low as about 1890 when you look at that. Now, that doesn't do any damage to the longer term chart over here because it's so far above where the low began over here. It's just the continuation of this correction and much nearer the highs than it is to the low. So this looks to me like for the short term, as we look out these next few weeks, this is negative. You see over here that it's been neutral on the momentum. It turned positive, but then, it turned negative. It went neutral again and then negative again. So not looking great. There's another question there that somebody wrote me about. What do I think about the real short term in the gold market? And when I look at it here on these charts, now I'm looking at the daily on the left and I'm looking at the 2 hour on the right. You can see in here what happened, and that is a test that occurred as it got here into the swing zone. It just barely got above it and then came down and then crossed over again, which is a failure. And look at all this time here with this 3 weeks to go with this negative momentum conditions, that slim ribbon turning down over here. If you're a short-term trader, you're looking for short side trades in this, or you certainly wouldn't be buying it because the risk rewards are higher to the downside. Somebody put a question on there is, how do I know what the probabilities are? Well, I can't give you precise numbers, but I can tell you based on structures and all of the indicators we use, whether it's a higher probability that it'll go down than it'll go up. I mean, that's really often very clear to us. And in this case, the highest probability is that rallies will fail. I can't tell you the rally is going to come from where it is right now, or it's going to come from 10 or 20 points lower, but I do know that when a rally comes, it is likely that it is going to fail. So I wanted to show you that version. Remember, if you're a level 4 member, you can do everything that I'm doing right now. We give you this all to you, and you can just do all of the analysis that we're looking all by yourself. So the other question was on silver. Silver is a slightly stronger structure, and you should be able to see that when I look at this right over here, because silver has not broken down yet where gold did over here. So you can see, even though it had a couple of big down days here, it is still stronger. But when you look over here at the momentum condition, it tried to turn up but could not. And then the slim ribbon PO gives you the resumption signal on the downside right here. And it was very accurate as it did resume to the downside, as you can see. Now, this is making kind of a big triangular shape or even a diamond that's forming in there. And that could be that, you know, it won't break down and it will remain stronger. We'll know that what happens out over here. If it doesn't get underneath this level at that low at 22.56 in the next 3 weeks, then we'll know it's okay. And it would certainly be a better pattern than we see in the gold market. I have a question on VIX. VIX has been now, it was spectacular for us as an indicator for the general market for a long, long period of time. And then we kind of lost it. Let me just get the proper weekly, as you see right there, and daily, as you see right over here. So again, you could see the alignments in here and the cyclical patterns are beautiful. I talked about right over here that we had a bottoming going on, and you could see the cycle lines right over here where we thought that the trough would get formed. And we said that it looked like it was in alignment with the daily over here. And that is where we are. We expected that it would get up, to this level or higher, and it did so. It could easily get up into the mid 20s to even 30s in the period that we're looking for of weakness that comes into the end of October. So VIX, a really good indicator for us of inverse indicator. Remember, the VIX is simply the demand for puts, the demand for insurance. And when the VIX goes up, there's a big demand for puts. That's what it all means. It's that simple. And here you could see 3 or 4 weeks into this rally over here is very early on this cycle. That simply says it's likely that the stock market in bounces, the VIX will pull down, and then likely will be moving to the downside again. Same person asked for Bitcoin. Here's Bitcoin for you here. And the Bitcoin market is, I believe, in trouble and likely to get down to about 23,500. Here, the reason I'm saying that is that this cycle over here on the daily chart, that the trough comes on 11/8. Over here, 11/8 is right here on timing. So that says to me that with momentum negative here, momentum turning negative right over here, just turning that way, this is probably the high that we're going to see in this cycle. And it's, not far from the 38.2%, as you can see there. And that is very likely going to give you this period in here. Once this turns down and becomes negative, it's very likely going to give you a sizable sell-off in this period. If it doesn't sell off sharply, it's going to be a message. But then out over here, when you get into November and potentially into December, this is where you could get another rally that tells us whether or not this has any strength to it at all. So that's a look at the Bitcoin market. Let's see what else we have in here. This comment, it says, it seems the world knows about the head and shoulders top in the S&P 500, as you could see right in here. Somebody else asked me that question today, and with so many, he says, with so many people thinking about it, does it give reason to believe that the pattern will fail and the market rally back above the neckline? I actually don't think the neckline is relevant in here. Let me say one thing that I believe is important when we look at this analysis, and that is that when you look at a head and shoulders, and I'm just putting the head and shoulder, I'm just putting in the range of the head and the shoulders right in there. If it is a kind of a neutral slanting one versus a steeply downward slanting one, if it's neutral or slanting up, it has a higher probability of working than one that is slanting sharply down. And the reason for that is because once it comes down and breaks the shoulder over here, it spent a lot of energy on the downside if this was sharply slanting to the downside. So now what I want to do is I want to just duplicate this, because that's how you get the measured move, as you can see right there on the head and shoulders. And that measures down over here to about 40.70. And you can see that our projection over here is to this fib down over here at about 4100, 4110. So yes, this area right over here is a pretty good area to have a target for this time frame right there. That's probably where the target is for this decline, as you can see, using the head and shoulders measurement and using our support areas and the cycle formations like that. So that's the head and shoulders. It is obvious, but I think it has a high probability of working. And when we get to this period right over here in October, towards the end of October, and we can see which of these tracks it takes, we're going to have a good idea about strength or weakness. If it gets, up into here in a rebound and then doesn't take out this low or just equals it, we know that the market is really strong. If it takes the track we expect, getting down near 4100, Well, we'll know that the intermediate patterns are really weak, because remember that what affects that movement is the weekly over here, is what affects the daily. The strength of the decline, the amount of aggressive selling. That's what how we really learn that. So I think the head and shoulders is real. I think it's likely going to get close to that measurement. Question now is, do I think the dollar has topped? DXY is what we're going to look at. And we'll look at the weekly and the daily here. And this is actually the old weekly right there that we had, because it wasn't clear to me what was going on. It was just trying to break out. And this is the revised weekly that we put on there today. That's what we do. It gives us information, and then we put in the revisions based on the best information that we have. So if I look here, this actually looks like the projections point to the dollar not really peaking for a long period of time. That could take you out into early part of next year. 107 is that major 50, and right over here is 109 is that major 61.8. I doubt that it's going to make it that one up over there, but it is possible. Look at the momentum strong. Look at these cycle patterns. They're giving you a good indication that you're probably going to get a pullback in here into this timing into November, and then be moving up again over here into towards the end of the year. So it doesn't look to me like the dollar has peaked. And look at the powerhouse move that we have in here. You can see the minor cycle, minor thirds. Very likely that this is going to have some kind of a minor pullback in here, but it may just stay in this range and not even get to the 23.6 and then be going up again. This is a tower of strength. We call this a swamped cycle. Look at the slim ribbon. I mean, it's just doing its job. Look at the slim ribbon PO doing its job. It's giving you the information that you need to have as you have that super strength that's showing up in there on that daily chart and on the weekly chart. So I can't say that it's topped, the dollar's topped. If anything, I could tell you, it looks to me like a pullback would be temporary and it goes higher. Question now is about the Russell. PS is asking me a general question. Is the Russell difficult to forecast and trade in comparison to NQ and ES? First of all, I want you to know we do not do our analysis on NQ and ES. The reason for that is because over the 49.5 years I've traded, and since they came out in the early 80s, I've traded them ever since that time, they've gone from a big premium to big discounts. And for that reason, the charts get messed up. So they don't give you a good read. We use only the cash indexes. Now, getting back to your question, is RUT more difficult to forecast and trade in comparison? I don't think so. The reason I don't think so is that the Russell has its own cycles that doesn't line up really well with the other indexes, and that's because of the nature of the Russell. The Russell is an index, the Russell 2000, of course, 2,000 stocks. The vast majority of the stocks lose money. So it's an index that loses and that borrows a huge amount of money, and also has a lot of banks in there that have gotten in a lot of trouble. That's the reason for how it does not trade with the market. So I would say to you that that is important to do analysis separate from what you do in the SPX and NDX and the Russell. NDX and SPX lining up very well right now. TLT is the next question right over here. TLT is in a really bad setup, as you can see. It turned negative way over here in April. When you look at the momentum, it flattened out for a few weeks, then turned negative again. And the momentum has been giving you that story right in there very clearly. Now, you can see the resistance here. I don't even know if it's going to be able to get anywhere close to that. When I look at the daily, there we go. You can see that the daily slim ribbon has been screaming that it's negative. It gave you a bounce in here and then turned negative again. The slim ribbon PO on the bottom, red, as you can see. And this says, as it hits the fib extension down over here, maybe another week, before a temporary bottom is seen, a rally up here into maybe 92, and then very likely to move down again. I think that would be fake. Look at all this time to that next cycle trough over here. That could be way out in the end of November. This rally is very likely going to be an important sale. Looking at the TLT, how much more time do we have here? Maybe about 5 more minutes, right?
5 minutes. Yep.
Yeah. Okay. So let's just see what I'm missing here. There's a question about the MCM. Can you filter out the ETFs and just look at the equities? We don't have that capability yet.
It's a good question. And that's what the Pro is meant to do when we have that version. You'll be able to set your own watch list.
Ah, forgot about that. Good. Very good. Let's see what else we have in here. Roger says, great new feature on the MCM Pro. He says, sign me up for beta testing. How do they get signed up for that?
As long as you have the MCM premium version, you're going to get it. Everyone's going to get it who has it.
Great.
Yep. It's like Christmas, it's like a present. You just wake up and there it'll be.
Good. Let's see. So let's see. Covered gold.
Gold, yep.
I didn't really
There's
show
the one
the
asked about favorite trading asset and why. That was an interesting question.
Well, are you asking me mine? Because whatever my favorite trading asset's got nothing to do with you.
It's each team member what their favorite trading asset is.
Well, over the years, it's changed for me. So right now I'm trading. Right now I probably trade more options than I trade anything. For me. Katie, what's your favorite asset?
I trade options on the cash indexes every single day.
There you go. Okay. And RV, I can't answer for him. Matt, what's your favorite?
Well, in terms of just pure technical analysis, it is the NDX cash, and it's intraday. It follows that intraday grid that I do beautifully. So that would be it.
Great. DJV16 says, hi, Slimmy. Can you please have these talks every day? Because I learn so much every time. Take, for example, the head and shoulders slant explanation you just gave. Well, that was a good one. Yes. Well, that's because I've been at this for so long, so I know stuff, so great. He says, thank you. You're the best. We love you. OIH, we're past that. I don't really have that. We need more slim. Thanks, David. Let's see, is there anything, the only thing I didn't cover here that somebody's asking is I didn't really show the NASDAQ. So I think I'll just go back to that really quickly.
All right.
Here's your NASDAQ charts right in here. And as you can see, we're looking for a low out over here in the October timeframe. This points to a synced low right at the end of October. So this should be coming down to about the end of October. I have that drawn a little bit early in time. And a bottom due on the minor cycle. So the trough should form in here pretty soon. And then the rally, and then moving significantly to the downside. If I move over here to this chart right over there, I'm just going to show you these indicators here, and you can see that the NASDAQ is not as oversold as the on the daily chart as the RUT is. You can see in here that the OBI has turned negative again after going neutral. And just take a look at this. I mean, look at the value of the slim ribbon PO on the bottom. Look at the value of the slim ribbon. It comes in here and dies in it, which often happens. Resumption signal, resumption signal, resumption signal. I mean, just absolutely fabulous. So what that says to you is that there's a high probability, and look at where it came through right over here on the MCI and gave that failure signal. So that was on this date right over here. The indicators were all screaming negative, and that's what you got, the big decline. And it says to me that you're likely to get another rebound that turns into another failure. That's it. We gave them everything we can give them today. All right, just want to say goodbye to everybody. We loved having you here, and we got a surprise coming up about our live events that we'll let you know real soon.
Yeah.
What do you got to say, Katie?
Thank you for participating, everyone. Always good to have you.
Yeah, great questions, great engagement. It's always fun.
All right, that's it. We'll see you soon.
All right, take care, everyone.
Bye-bye.
Bye-bye.